Alright guys, this is my first tutorial on how to analyze the markets using some fundamental technical analysis. Now this video might be a bit advanced for some people out there because I'm using a few things that probably people never heard of. Now, but it's pretty much the methods that I used on a regular basis, Now, the first thing I want to discuss in everything is it's something called the Fibonacci retracement. Now, the Fibonacci retracement, I believe, is one of the one of those fundamental tools that every investor should use, every single analyst should use. Now, Fibonacci retracement refers to the present Fibonacci, or the Fibonacci code, which evaluates that everything has a continuous number. For example, that the previous number adds to the other one and gives you the previous number. Now, if you have complications understanding who's Fibonacci or what is the Fibonacci code, you can just Google it and to find the equation. For example, in this equation here, it shows you that D is equal to B plus B minus the previous number times the percentage of N, which is, and pretty much will give you every single time the Fibonacci code, which is in decimal form. Now, but using, like, again, now that we have technology, we have computers, these tools analyze you pretty much as fast as you can. But now, if you guys don't have these charts, you have to do it by hand. Now, I'm gonna construct you step by step, the little drawings, step by step, because I want to teach you how to actually do it in the software and how to actually do it. Now, the Fibonacci method, or the Fibonacci refractments, refers into vertical lines, gives you pretty much probabilities of support and resistance lines of a specific ratio of 23.6, 38.2, sorry for that, 50, 61, and 100. Now, let's see how this works in a chart. Now, in this chart, I'm using something called Leap Wireless, a telecommunications systems, pretty known as Cricket. Now, I'm using the daily chart. We've used a daily chart using a pretty 646 of bar candles. Now, first, let's draw our Fibonacci extensions. Now, we have Fibonacci extensions here. Now, how you draw the Fibonacci extensions, you take the lowest low of your whole entire graph and draw it to the highest top of your graph, Fibonacci refractments, sorry for that. Fibonacci refractments, you take the lowest low and draw it to your highest top. Now, this gives you the Fibonacci refractments. Now, every single line here is a line of support and resistance, as you can see how the market flows up and down. As you can see now, every single chart tool will not work in such perfection. If that would be true, everybody would be rich. But it does give you a tool in order how to analyze the markets. For example, let's take a look here. Now at 601 was one of the market low. As you can see how it just jumped up all the way here. It went down, it jumped again, and the candle reached up to the 1049 Fibonacci second line, the Fibonacci third line extension or refractment at 1049. And look at the sell-off that happened here. Now, this is one tool that you can actually analyze. Now, the second tool that I'm going to actually talk about, it's something called the psychopractice, which in essence is wave theory and psych movement. Now, what are psychobrackets? Well, the psychobrackets are precise measurements in order how the stock market follows. For example, during Christmas, you can see that the markets move up, or during certain months, you can see how commodity inflation, such as between, I believe, March, the cycles for commodities, or how the market flows in cycles, which gives you an understanding on when to buy or when to sell the markets. Now, in my understanding, I use this is my thing because I've seen it work in many charts. I use something called the 3-7-12 ratio. Now, what the 3-7 ratio means, that I use 7 waves, 3 waves, and 12 waves, depending on the chart. Of course, this is going to take a lot of experience and a lot of practice, but it does give you an understanding on how to draw this, and how to draw this 1, 2, 3, 4, 5, and how to draw these waves. Okay. Now, right here, as you can see, we have 1, 2, 1, 2, 3, 4, 5, 6, 7. The cycle is not completed yet, but it's about 7. Now, what a cycle work means, or wave means, that every single time in the end cycle, you're supposed to have a down market deflation, inflation, deflation, inflation, deflation, inflation, deflation, inflation, deflation, inflation, deflation, inflation, and then again another deflation. Now, as you can see here, as the end of the cycle works here, you're supposed to have every single time a red line, every single time the cycle works finish. It's pretty much not always accurate, but it does give you an understanding again of how the market flows. Now, the second analysis that I'm going to use is something called, and pretty much every single investor out there, I'm sure that uses this, is something called volume expansion, retraction, and consolidation patterns, or volume analysis. Now, volume is the most important indicator in technical classes. It measures the market move. The markets have made a strong price move either up or down for that, and proceed to strength move depending on volume for that period. The higher the volume during the price move, the more significant the movement. Volume is one of the most fundamental terms in understanding that helps you analyze cash flow, outflow of the markets. You can measure the volatility and acceleration of the market flow. Now, let's apply this into the charts. Now, as you can see here, these light blue bars, it's the volume. It's the volume of investors, depending on how much investors are buying and how much investors are selling. The more the volume, the bigger the move. The lower the volume, the smaller the move. Now, there are different types of theories of volume and how it actually moves. But in my understanding in volume, you usually always buy in a precise. If you want actually how to make money, you wanna buy when there's large volume, because when there's large volume, there's more volatility in the markets. In other words, you can sell your stock and you can buy in a more precise manner. Now, in this video, I'm not going to discuss all the techniques that I use for volume because it's such a short video, but for now, I'm just going to teach you 3 basic things. As you can see, as the volume hits these bars, it means that it's extremely oversold. As you can see, you see the rebound back. Again, low volume, market goes up. Volume touches the bar, graph goes up. And again here, this is overbought. Volume doesn't even touch the bars, market goes down. And pretty much that's how you calculate the three basic elements of technical analysis: Fibonacci refractments, cycles, and volume. Now, let's I think I have a few more minutes in this chart. Now, in order to calculate whether